All right, everybody. Welcome back to Note Camp here 2021. After a short little break here, you are in a treat. Make sure you grab a piece of paper, something to write some on, because I'll tell you right now, very blessed. We've interviewed a lot of people on our podcast or Note Night in America, and I was very fortunate to meet our next speaker, our next expert at a online mastermind during COVID. And she reached out to me. We got to talk. I was like, oh my God, this is something that's so relevant. And when she came on Note Night America a couple of weeks ago, literally, oh my God, questions. Is this real? Can this really happen? And I was like, I was even blown away talking with her. So really excited. This is not your traditional tax expert. Okay. This is not how to get another write-off or stuff like that. This is something really, and I maybe I'm taking a little bit too far, but how to tell Uncle Sam and the IRS to F off, to go pound sand in a lot of cases. Kelly's probably not going to use that strong a language, but honored to have a tax avoidance expert here, Kelly Alexander, join us here. And I'll tell you right now, ladies and gentlemen, stay tuned and don't log off. Take some notes. Kelly, the floor is yours, dear. And I'm sure you probably want to save questions to the very end because you got an hour 15. So go through it, then questions at the end. Okay, I'll moderate.
I'm going to do a presentation and I'm going to answer a lot of things as we go, but definitely make note of things that stand out that we want to talk about afterwards. And yes, as Scott said, I'm going to blow your mind.
Take it away, Kelly.
All right, I'm going to share my screen. And okay, share.
There we go, starting to pop up.
And where'd my mouse go? There it is.
Frank is excited already. Yep, exactly. There you go. Perfect.
All right, great. So welcome everybody. I'm Kelly Alexander. I've done years and years of legal research and I uncovered some actually extraordinary information. So I'm going to show you today how to legally stop paying income tax on all of your note and real estate investing profits, as well as every source of income that you have. So here we go. Here's just a funny way to start. This is a reflection of the typical angst and headache that we all often go through at tax season. The forms, not only is the income tax a financial cost, but it's an emotional and a psychological cost as well. So who here can relate to this? Get me out of here. All right, so just to give you some statistics, the average taxpayer pays $10,000 per year to IRS. Obviously, many people pay more. Many people pay less, but this is the average. $100,000 annual income, which is pretty, I don't know if it's average, but it's pretty typical, ends up creating a lifetime tax bill of approximately $764,000. And again, it's more for some, less for others, depending on how you utilize the tax code, what your income is, and so on. When you adjust that for inflation, you're actually paying $1.4 million over your lifetime on average for your income. So what I'm going to present to you today is the first big idea is it wasn't always this way. There was life before the income tax in America. So what actually happened? Well, 1913 was a big year. That was the year that the Federal Reserve Act was passed. It was signed into law by, at the time, President Woodrow Wilson. The name Federal Reserve is by design a false, deceptive title given to a private entity, a private trust. The true purpose of the Federal Reserve is to allow It's private creation, control, and ownership over our nation's currency, credit system, assets, and ultimately the systems. This level of unaudited and unaccountable control ensures unlimited profit for the Federal Reserve System and the private banking interests that control it. And it does this through the perpetuation and exponential expansion of debt, both public and private. The Federal Reserve is also the primary cause of inflation. All right, so the Federal Reserve. What does the Federal Reserve have to do with taxes? I thought this was an explanation of taxation. It has everything to do with our internal revenue service tax system. The IRS is the debt collection arm of the Federal Reserve. Without the unnecessary Federal Reserve, there would be no income tax and there would be no IRS. Rarely, if ever, is this spoken of in any of the segments of our society, whether it's media, education, financial services. The IRS and the Federal Reserve are linked, joined at the hip, very connected organizations. The Federal Reserve issues new money into circulation based on bills passed through Congress. This creates and adds to our national debt. And they also do this through all of their member commercial banks, all the banks, whether, it's a major bank, a state bank, a credit union, these are all tied into the Federal Reserve System. They loan new money into existence via credit cards, mortgages, business loans, consumer loans, car loans, that type of thing. And every Federal Reserve note dollar represents a dollar of debt and becomes an obligation on the US government to pay back both in principal and in interest. The obligation on the government to pay all this back, this is the reason for the IRS and the income tax. Who knew? All right, this is a great book I want to bring your attention to, The Creature from Jekyll Island, written by G. Edward Griffin, written around the 1994, if I'm not mistaken. The Creature refers to the Federal Reserve, and it's a book, it's an expose on the Federal Reserve, how it got passed into existence. And Jekyll Island is actually a small private island off the coast of Georgia, where several banking families and interests from Europe came together to figure out how can we get a foothold in America of our central bank. So that's what led to the 1913 passage. And then a little bit more on the way the Federal Reserve works. All loans require repayment of principal and interest. The money required to pay the interest on that principal is never created. This means that it is mathematically impossible for all loans to be repaid. Yes, many loans get paid off. But what happens is, because there's always not enough money to account for the interest, this is primarily why we have bankruptcies, foreclosures, short sales, discounting of debt, and the resulting boom and bust cycles, and the recessions, and then the expansion periods. All of this is contributing to the growth of our national debt. And the national debt grows exponentially based on Federal Reserve practices. All right, so here's a quick graph of the what's happened to the purchasing power of the US dollar, the Federal Reserve note, since 1913. So 1913, $1 bought $1 worth of goods and services. Okay, as time has gone on, it's gone through some changes. By 2013, that same dollar purchased the equivalent of a nickel's worth of what it would purchase in 1913. We are in 2021. I'm pretty sure our current dollar would purchase roughly 2.5 cents of the goods and services that it could purchase in 1913. All right. So a couple of quotes. This first one from Reginald McKenna. They who control the credit of a nation direct the policy of governments and hold in the hollow of their hands the destiny of the people. That's directly referring to the Federal Reserve or any central bank. This next one by John Kenneth Galbraith. The study of money above all other fields in economics is one in which complexity is used to disguise truth or to evade truth, not to reveal it. The Federal Reserve puts out these bizarre publications. One of them is called Modern Money Mechanics. And it explains money creation, but it does it in a way that is so hard to relate to. The words and the terms and the phrasing used is exactly comports with this quote. They don't really want you to understand. And so they present it in ways that make you, oh God, let me just go, go take a shower and do something else. All right. Also in 1913, this is not a coincidence, the Revenue Act was also passed that same year. And that is, as I said, because the connection between the Federal Reserve and the taxing authority of the IRS is linked very closely. Up until 1913, Americans kept their earnings. They didn't go through the ritual that we go through of filing a 1040 tax return and other tax forms. And in 1913, we still had roads and schools and bridges and universities and a Navy and all of those things that we are told our taxpayer dollars go to provide. So I'm going to show you, in a sense, how to turn back the clock to pre-1913. Oh, this is great. This is a great expose also of how our income tax started and what it has become. Back in 1913, the top tax bracket was 7%. By 2013, our top tax bracket had grown to 39.6%. The lowest tax bracket started at 1%, whereas now our lowest tax bracket is 10%. Oh, this is one of my favorites, the top bracket thresholds. So in 1913, you had to have had $11,600,000 of taxable income to be eligible or to be obligated to the 7% top tax bracket. In 1913, you had to have had $450,000 of income to be subject to the 39.6% tax bracket. That right there is so despicable, so egregious, so crazy. I mean, I can imagine, when this first started, people say, oh, 1%, no big deal. I'm a patriotic American. I'll pitch in my 1%. But see how it's changed once the tax people get in there. This is more about control than raising money for goods and services. So tax revenues, yes, those have increased significantly. Currently, it's closer to $3.2 trillion. Oh, this is another one. The standard deduction. In 1913, it was $93,000. For most people, that was a 10-year decade of earnings. Now, or recently, the standard deduction is $12,200. I think it's $12,400 this year. Number of tax returns filed has grown exponentially. That's primarily due to population, but it's also due to other misunderstandings about the tax code. Total pages of the tax code started off at 400 and is, well, in 2013, it was just shy of 74,000. I believe now it's closer to 90,000 pages. All right, and then just a quick thing on inflation. $1 million in 1913 bought $1 million worth of goods. $1 million in 2013 purchased 42,640,000. That's the massive loss in purchasing power. All right, 1913, worst year ever. Oh my gosh, what are we going to do? Many people come to me and say, the Federal Reserve is unconstitutional. And actually, it's not. It would be unconstitutional if we were forced to use the Federal Reserve notes and also pay the income tax for that privilege of using the Federal Reserve notes. Most people have no idea that there's a choice. And that's what I'm here to present to you today, is a choice you never knew you had. So there's remedy. Remedy for this whole situation I've been showing you is found in the banking laws, not the tax code. There is a body of law called the United States Code. This is federal law. It's composed of, I think it's 52 separate chapters, and each chapter is designated to a certain area of law. Title 12, which is the one that's dedicated to banking law. And then there's a section in there, subsection 411, that talks about the reserves for banks, Federal Reserve notes, the obligation that they place on the government, and something called redemption. So this part highlighted in yellow, this is the significant part of what I'm sharing with you today. Federal Reserve notes, they shall be redeemed in lawful money on demand at the Treasury Department of the United States in the city of Washington, District of Columbia, or at any Federal Reserve bank. So what does this mean? I'm going to break it down for you. They shall be redeemed. Shall, in legal terminology, is a term that means that it is mandatory, not optional. So Federal Reserve notes shall be redeemed. What does redeemed mean? Redeemed is a term for exchanging one thing for another, for taking something of lesser merit and turning it into something of superior merit. It is could be buying out an interest from one thing to another thing. So it's an exchange of sorts in lawful money. Federal Reserve notes shall be redeemed in lawful money. What does this mean? Well, it must mean that there is some other kind of lawful money if it's going to be redeemed for it. You don't redeem one Federal Reserve note for another Federal Reserve. That's not a redemption. So lawful money refers to some other money. And the other money is the money that our U.S. Constitution authorizes our U.S. Congress to issue directly without the involvement of a central bank, such as our Federal Reserve. So how is this done? This is done on demand at the Treasury Department in Washington, D.C., or at any Federal Reserve bank. So you simply make a demand to convert your Federal Reserve notes for this other lawful money. All right, so the big idea here is that there's two currencies. Who knew that? And you get to choose which one you want to conduct your financial transactions in. All right. So the default currency, as we've spoken of, that is the Federal Reserve note, has been issued since 1913. It creates an obligation on the U.S. government to be paid back both in principal and interest, and it is subject to the income tax per the tax codes. All right, the other lawful money or currency is known as United States notes. It's issued by the Congress as authorized by the Constitution. It does not come with an obligation to be paid back to the U.S. government. When U.S. notes are issued, it's a reflection of the goods and the services that we, the citizens, create through our businesses, our labor, our ingenuity, our creativity. And because there's no obligation to pay this back, This currency, these United States notes, are not subject to income tax. Wow, that's a wow.
That's a huge wow.
That's
That's
where
a
your head's about
huge
to explode and
wow.
go, oh my God. And you get to choose which of the two currencies you would like to utilize. All right. So, presumption. What is a presumption? This is the acceptance of something as true, although it is not known to be true for certain. There is a standing presumption that all of us are conducting our banking, our financial affairs in Federal Reserve notes. Unless and until that presumption is broken, it stands as fact. So I'm going to show you how to break that presumption. So how do we get these United States notes? Well, they're no longer physically in circulation. There might be some in collections, like coin collectors and people that like to collect history of money and things like that. There may be some stored in a vault somewhere. I actually have a version of it. I have a silver certificate. It's not a United States note per se, but it's issued by the Congress. It is one of the forms of lawful money. And it's $1 that can be converted to physical silver. So how do we get these notes? Well, we don't get them in physical form. We just say that these are the ones we want to use. And so if you receive a check, which is not common these days, but the key is how you endorse your check when you deposit into your bank account. So typically we flip over the check, we sign our name, go to the bank teller or the ATM, put it in, and we either get cash back or we get this credited to our bank account. What I show you how to do is, instead of merely signing your name, which means you are endorsing the Federal Reserve system, and you're pledging all of your labor and your future assets in the event of a nationwide financial collapse to cover the national debt. Yikes, who wants to do that? That's bondage. We're not taught that that's what our signature alone is doing. So instead, I know this slide's a little blurry, a little hard to read, but it says lawful money is demanded pursuant to 12 USC 411, and then you sign. This is you making your demand for the other lawful money, the non-taxable lawful money. This is exactly what you do based on that statute I just showed you a few slides back. All right, so what does this apply to? Well, many of you are real estate investors and note investors. Certainly it would apply to that. If you have a job where you earn W-2 wages, it applies to that. If you're a business owner and let's say you have a merchant account and you receive funds into your bank account from your merchant, it would apply to that. If you have a corporation and you receive shareholder distributions, if you're a cryptocurrency investor, if you have a pension, if you have a freelance business, if you receive Social Security benefits, every form of income, there's a way to make that demand for the other lawful money and no longer subject your income to the income tax. And you know what? At the same time, you're helping the US government lower that beastly national debt, which is, I think it's around $27 trillion, which is honestly beyond what a human mind can wrap its head around. Okay, so one other example besides a physical check. I know those are less common in our modern era. If you receive direct deposit of income, whether it's from a job or Social Security or a property manager or whatever other number of ways you could receive a direct deposit, you authorize somebody to put money in your bank account. And so this form, allows for naming your bank, yourself, your account number, your routing number. And then right here on the signature line, the same verbiage as if you were writing or endorsing a check. Lawful money is demanded pursuant to 12 USC 411. There you go. You've made a record, one piece of paper for each source of income coming into your bank account.
The PayPals, the Stripes, the your paycheck from the JOB. Wow.
Your brokerage account, your pension. Yes, any form we can make this record. All right, so I want to give you a bit of history. Back in 1933, America was going through the Great Depression. FDR, Franklin Delano Roosevelt, was president. The country was actually going through a form of a bankruptcy and required some significant restructuring. FDR put out an executive order requiring the citizens to turn in their gold coin, gold bullion, and gold certificates to any Federal Reserve branch bank, and exchange receive Federal Reserve notes that would no longer be backed by gold. The first 20 years of the Federal Reserve, those Federal Reserve notes were backed by gold. Our gold standard for the nation ended in 1933. So one of the congressmen at the time realized and spoke up about the fact that we take the citizens' gold and we give them paper money that is no longer backed by gold. It's now a fiat currency. This is an unequitable exchange of value, and would have required prosecution, and it would have made the Congress liable for theft and treason against the people. That was an unacceptable position for the Congress to put itself in. They'd be violating the Constitution. They'd be violating so many things. So from the time this congressman brought this forward on May 23rd, by June 5th, less than 2 weeks later, legislation was passed called HJR, which stands for House Joint Resolution 192 on June 5th. And that resolution provided mechanisms for reckoning with that unequitable exchange. They had to provide a remedy for the people. And included in this House Joint Resolution is Title 12 USC 411, which is what I shared with you above. This is the reason that this statute cannot be revoked or deemed a loophole that can be closed at some point in the future. So what did they do? They buried it. They buried it in banking law. It's a needle in a haystack. They had to provide the remedy. So this is why it's so rarely spoken of in all of these status quo, Main Street areas of our society. I would guess that perhaps maybe 0.5% to 1% of the population is aware of Title 12, subsection 411, but that's just a guess on my part. I really have no way of knowing, but it is very, very, very few people know about this. All right, moving on. So here's just a depiction of the relationship between the government or the taxing authority here in black and the fisherman here. He represents we the people. This is why we are the primary assets of the country. We are the producers, the laborers, the business people. We are the ones making the economy move and progress and improve quality of life and all of those things. And the government merely takes a portion, unfortunately, a huge portion of our productive activities. All right, so redemption, it's the law. Title 12 USC 411 has been on the law book since 1933 when the gold standard was removed. So what does it do? It allows you to redeem your income so that it's no longer subject to taxes. It allows you to redeem your financial destiny so that you can reach your full financial potential. And in my view, it allows you to redeem your mind by liberating yourself from a lifetime of indoctrination to pay your fair share, that death and taxes are the absolutes. And as I said earlier, redeeming the Federal Reserve notes helps lower the national debt. This is a win-win, a win for us as individuals and a win for the government in terms of the onerous debt that we have. All right, so I saw this image and I thought, oh my gosh, this is a domesticated elephant. And I don't know if many of you may have heard this story about, you know, when a baby elephant is born, say in a circus environment, it's shackled and put on a leash, and it learns that it can walk as far as the leash allows it to, and it becomes conditioned to that range of movement that it has. When the elephant grows up, it has been conditioned for so many years, it just naturally stops once the leash, once it hits the limit of the shackle. However, a grown elephant is so strong that it could uproot this stake easily. And I thought, oh my gosh, we've all been domesticated as citizens of the country to accept terms and conditions and, this taxing system and this Federal Reserve system from birth. And we don't realize that we actually have choices and options that were never made known to us. So I want to share that because I think, unfortunately, there's a connection. All right, another term I want to share with you is consent. There's two kinds. One that's given by default without knowledge of the consequences. And then there's informed consent, where you willfully, knowingly, and deliberately make a selection where all of the terms and conditions are disclosed. And today, you're now aware of choices about your money you never knew. All right, so there's 4 steps to getting free from the income tax. The first, and in part what we've done today, is I'm showing you that this is actually a paradigm shift. Having an awakening to what has been very carefully hidden and learning how to take some simple steps to turn the laws and the choices into your best interest, not the best interest of the status quo and the banking entities. The second step is the mechanics of it. Yes, there's some paperwork. Like I said, it's 1 sheet of paper for each source of income coming into your bank account. Also, or number 3, I provide a coaching program where I go deeper into the law, the history, the role of the IRS, more about how the Federal Reserve works. So you get a good deep dive into this area. My goal is to empower people, not just to be someone else that you listen to and follow blindly. I'm not interested in blind followers. I want people to be empowered and doing things with full knowledge. And then finally, the last step is I work with you in preparing your 1040 tax return correctly so that you will either receive a refund of your withholdings or you will not be writing a check as a business owner for your income taxes. This does not eliminate the Social Security and the Medicare withholdings or self-employment taxes. Those remain, and you still can benefit from those programs. All right, so as I said, I offer something called the EPIC Tax Liberation Coaching System. It includes the 4 steps I just outlined above. There are video trainings with fillable forms and checklists and all kinds of things that are helpful in your journey towards freedom. I give you everything that you need to succeed. I provide full personal support no matter what. It's rare, but it is possible for someone to be challenged by IRS or one of the state taxing boards. But I will work with you on resolving that, and I offer a full money back guarantee of results. The way that I charge for my coaching is this. I work with you in finding out what your income tax liability is, and then my fee is 50% of that. So you pay me 50%, but you get a full refund or an elimination of your taxable amount due. And so let me give you a couple of examples. Let's say you have a job and you had $17,000 of federal withholdings from a paycheck and another $6,000 withheld for your state income tax. That's a total of $23,000. So my fee would be $11,500. It's a one-time fee. I work with you the first year, and then you know what you're doing. And if you want support for supplementary years or subsequent years, then I just do that on a maintenance per hour basis. If you're self-employed, we calculate your income tax liability. We do not include the Social Security and Medicare taxes because those remain. Simply divide it by 2, and I do have a minimum fee of $3,000. All right, so imagine if the average taxpayer is paying $10,000 per year. In a decade, that's $100,000. What if you invested those savings? What would your life look like then? And then I wanted to share a few testimonials. I have been teaching my program since 2017. I'm just going to pick out a few of these. One from Joe Prunera. Kelly of Great American Tax Remedy is absolutely amazing. Her knowledge and passion for educating people is out of this world. Thanks to her, I have not only learned valuable information regarding taxes, the government, and lawful money, but I have also received all of my federal withholding back with no delay. From Michael. To me, the most important aspect of this eloquent lawful money process is the assurance I've received from Kelly should IRS ever have issues with my filing. I've bumped heads with IRS twice now over the past 30 years and swore I would do my best to fly under the radar in the future. What finally decided it for me to jump in was Kelly's assurances that she would stand by me should IRS bear their hackles at me. It will be 4 years now that I've committed to this process and have had 0 issues with IRS. I really appreciate Kelly's involvement with my tax matters. And one more from Steve P. Steve is a real estate investor. He does both, wholesaling and residential and commercial. He writes, still pinching myself after saving over $50,000 in 2017. What I learned about banking, currency, and the Federal Reserve was truly mind-blowing. I see the world now with a whole nother set of eyes. This is so powerful. My real estate investing business, due to the tax savings, is now positioned to make exponential leaps in seizing new opportunities, deal making, and realizing bigger returns. My bottom line is up by 40% since working with Kelly. All right, and then I just want to share a few refund checks that my W-2 people received. Back in 2018, Kevin from San Diego, $6,987. And also from his state tax board, $3,555. This is a state refund from the state of New York, $2,254. And this is a federal return, $11,231.82. This one's interesting because they also added $117 of interest on this amount, which I found fascinating.
That's kind of interesting. They paid you back.
Yes. As they should. All right, so here's my contact information. info@mytaxremedy.com is my email. I do have a web page where you can go there and download a small ebook. It's about 15 pages, and it covers some of this plus additional things in there. That's www.mytaxremedy.com. And then I do have a calendar page for those of you that would like to speak with me privately. I know every situation is unique and different, and I'm happy to, you know, talk to you, and see what makes sense for you. So, Scott, would you like me to keep this up while questions are coming in?
Yeah, let's keep that up definitely, so people can see it there. They're watching this either on YouTube or they're watching it here on Zoom. Let me pull this up here. But yeah, keep it up there for you. Let me undo my video there for you. So, what questions do you have? I know it's going to lead a lot of questions here for you guys. I know you're like kind of wow, that what you're not told doesn't mean that you should be told, or they're not going to tell you ways to work there for you, right?
Right.
Let's see here. Okay, so got a question here from Tony Miller. He goes, have you ever, he goes, they advised me, it said BB&T advised me that they would reject checks endorsed that way. A suspicious activity where they file a suspicious report. Have you ever run into that before, Kelly?
Who is BB&T?
BB&T is a big bank. Better Bank and Trust Company.
Okay, I've run into it with US Bank. I opened an account with them some years ago, and I actually put the terminology right on the signature card on the digital pad, and I got a call a couple months later by the auditor, and they said, we need you to come and revise your signature, otherwise we need to close your account. So I have run into it. It's very rare. I've heard that the bank can not, can decide to, not offer you an account. However, the law says these notes shall be redeemed. So, it's easiest, just go across the street to another bank. That's what I would recommend in that case. Sometimes the bank will, like every other area of our society, they'll put out a bluff and see if it's enough to scare you away. So, they don't have to do the job themselves of closing your account. So that's my response to that. I would just say, how far do you want to push it, or do you just want to go to another bank?
Okay. Cool.
And I've noticed variations from one branch to another within the same bank. With Chase, I had one bank that they wouldn't even give me a copy of the signature card. He said, I'll sit here for 3 hours until you fully understand what's on it, but I will not give you a copy. And it's a contract. It's crazy. I moved across town, and I had very gracious people there. Print one out, easy, no friction, nothing. So there's that.
As a previous banker, that surprises me, because if somebody wants a copy of their signature card, it's their signature card. It's provided. I mean, yeah. I open new accounts. And here's the thing too. You run into not all bankers are created equal. You have some people out there that, and I hate to say this, but a lot of bankers are trained the same way a lot of realtors are trained to stay inside. Anything that's different outside the box, it's got to be illegal, or we'll file an SAR. You can't do that. It's illegal. They say that.
Yeah,
that's not the case. Kelly, can you talk a little bit about some of the research that you've done, or because you've researched this for a while, but implementing this obviously for several years now? Yes. What are some of the, besides the, what are some of the things that you've done to research this or track down this information?
Well, I've looked up the case law, and there are several cases that say Title 12, 411, yes, you can redeem your Federal Reserve notes for the other lawful money. There's several appellate and Supreme Court cases that confirm that again and again. There is a case called Maryland versus Mcculloch, and it talked about a state wanting to tax a national bank. And the ruling on that was no, that's a violation of the Constitution. That's why this applies to the state income tax as well as the federal income tax. So for those of you, which is most of the states do have a state income tax. Like I said, this information is not easy to uncover because it is well hidden, but you'll see some things in the free guide about the actual wording on the dollar bills themselves, how it's changed over the years to obscure. They actually used to put the remedy right printed on the bill itself. This note is redeemable in lawful money at the U.S. Treasury or any Federal Reserve Bank.
Yeah, one of the great things that I've seen in the past is their silver certificates, the $1, the $2. Yes. The $2 bills was very common. You might still see that floating around a little bit, but you see them very much more. But yeah, the silver certificates completely say something exactly different than what we're used to seeing on our money right now. Like you were saying, yeah. Before you, Sam asked a question here. My income is only from IRA withdrawals. Could this apply to this income?
IRA with what?
Withdrawals. So is this a traditional or a Roth IRA, Sam? Pre-tax or post-tax? Because you basically, if you're withdrawing from your IRA, if it's like a 401k, you would be taxed on your tax bracket at that point if it was a traditional IRA. Because you paid it.
It applies.
There you go.
You might still pay the penalty fees for early withdrawal because you did make a commitment to use this account for certain dedicated purposes. But withdrawing, let's say you're above the 59 and a half years age and all those other things. And if it's a situation where you would otherwise pay federal tax, if you redeem that money for United States notes, lawful money, it is non-taxable.
Yeah, he's above 59 and a half, he says.
Yeah, you would still be subjected to early withdrawal penalties.
If you were withdrawing it early.
If you withdraw, say at 59 and a quarter or 58 or whatever, any other age below that marker.
Right. You can do this for anything, everybody. That's the biggest thing to keep in mind there for you, whether it's PayPal or Stripe. If you've got any type of income coming in, you're filing these forms. Besides SARs, you ever get any from banks like Tony was saying, anything else that ever kind of pushed back a little bit, or the IRS pushing back? You shared a couple interesting stories on Note Night in America. You want to share those, Kelly?
Yes, it's not common at all, but occasionally a taxpayer that does this remedy could receive a frivolous filing notice from the IRS. Most IRS agents are as unfamiliar with this as the rest of the population. And when they look at a tax return, such as the ones that I show you how to file, on the face of it, it appears frivolous to someone that doesn't know. So when that happens, well, actually, I started praying at some point that they would send me a frivolous filing notice. Well, if I'm teaching this, I want to go through the hard parts.
Yep.
So I got my wish granted about 2 years ago. I got a frivolous filing notice for year 2018, and then a couple months later for year 2017. I responded to both of those. IRS went quiet for at least a year and a half. And then I started getting notices from them early this year. In the meantime, I learned some more information, which is still a mind blower for me. And that is our US Congress has never authorized the IRS to enforce any of the tax codes. It's mind blowing. Yes, it's laws. And yes, people comply and pay and blah, blah, blah. But because so many people have no idea what their enforcement power is, and it's zero, That's how bank accounts get seized, wages get levied, liens get filed, because people do not know that that there actually is a way to stand up to that. And that's what I discovered several months ago. And so I sent them that I said, hey, you don't have any enforcing regulations to hold against me. And then I got a letter saying, we need 60 days to review your matter. We need 90 days to review your matter. And that's it. So I wish it was 5 years ago. This is still happening as of the beginning of this year. But normally, when a frivolous filing notice is issued, they're on you within 30 days, issuing penalty, fines and adding interest and late penalty, all that stuff. This is not happening at all.
Mm-hmm.
The other thing, this is real important. IRS puts out a memorandum that they periodically update of various frivolous positions that some taxpayers take in hopes of skating from the income tax. They have never added Title 12 411 remedy to that list of frivolous positions. And that's because IRS at the top levels, they know that this is valid. That's the smoking gun.
Mm-hmm. Wayne says, if this becomes popular, I can't imagine the government not changing this, like eliminating HJR. Any reason they couldn't change and make this illegal?
Well, they could go back to the gold standard. So we're not using unbacked fiat Federal Reserve notes. They could do other things, but we'd be happy because we wouldn't be getting ripped off the way we are now.
Mm-hmm. Good stuff there. Totally encourage you guys and gals to go on there. Calendly.com, Great American Tax Remedy. Schedule a phone call with Kelly. Talk about your situation. You can go back a little bit. Somebody asked the other night, how far could you go back? It all depends on your situation, what you've paid, and stuff like that too for you, Kelly, right?
Yes. If you have filed your recent tax years 2020, I would never ever advocate doing an amendment to do this process. This is not an amendment. This is a sea change. It's an overhaul. However, if you have some back unfiled years, we can do it.
There you go. I love it. I love it. I love it. Yeah. Ash is just fantastic golden nuggets out there. Good stuff. Any other questions for Kelly on this very interesting topic, very interesting remedy for you guys? It's well worth doing. God knows how much we pay in tax, especially capital gains taxes, short-term, long-term. This applies to everything. Sam asked the question there. It's mytaxremedy.com is the chat. I'll put this in here, HTTP, mytaxremedy.com. It's on the page there for you. And if you want to book a call with her, what if you have infield years the IRS is back charging you on now? K-Grass.
Okay, if you have a current outstanding debt with IRS and you start this process where you're entitled to a refund, your refund will get applied towards your old balances. So it will help you pay those off much faster than would otherwise, be available to you.
Mm-hmm.
Yeah.
Good question, Kay. Good question, definitely. All right. Well, Kelly, thank you for coming on. No Camp here. Appreciate it. Good stuff as always. Once again, guys and gals, mytaxremedy.com or Kelly's emails info@mytaxremedy.com. Check it out. It's worth the phone call. See if you can qualify or something you can put in place for you out there. Who wants to give Uncle Sam any more money than they deserve or don't deserve, right?
Right. I'd like to add one more thing. You can apply this selectively. It does not have to be all or nothing. Let's say you've got a job and a side hustle or a, side business and a job or whatever. You can apply it to one stream of income. Some people like to do that to get a little bit more eased into the process. I like to make that known so you don't feel like, you know, it's a leap of faith in the beginning. But I have 100% track record with all my clients.
Kelly, can you take a look and double check your Calendly link because it's not working? I just typed it in myself and it's not popping up here.
Great American Tax Remedy. I know that I wonder if is there a space between the / and the G?
No, I typed it all. I'm actually in the URL right now. There shouldn't be a space in the URL.
Yeah, there shouldn't. GREATAMER. Tax Remedy. Everything.
Either way, send her an email.
Just send me an email.
Yeah, send her an email. She can send you the working link for there, guys. Great American Tax Remedy. Oh yeah, well no, Great American Tax Remedy's working. I must have left it out in the link that you typed in there. That's probably what it is. Yeah, let me do that one more time to check it out here. Calendly.com/Great American Tax Remedy.com. Nope, still pops up, not working. So
just email me. We'll sort it out.
There you go.
I'm better with remedy than with technology.
Good stuff. Well, see, Thomas says, hey, I just scheduled an appointment on it, so it must be working for Thomas.
Okay.
That's good there, Thomas. But anyway, go to info@mytaxremedy.com. That's the easiest thing, and get rocking and rolling for you. All righty. Another question or comment. Wayne asks, how many clients are you working with on this right now, Kelly?
I have 40 clients and counting, maybe 43, 44 as of last count.
There you go. Good stuff.
Yeah.
Good stuff. Awesome. All right, Kelly. Well, thank you so much for coming on Note Camp, and we will talk to you this week. Alrighty.
All right. Fantastic. Wishing you all a fantastic day.
Thank you very much. See you later.